Welcome to this presentation of the correct way to trade pullbacks in the Forex markets. Hello and welcome. My name is Stephen Primo. I am the president and founder of Specialist Trading, and we are an educational site where I will give these educational webinars from time to time to share the things that I've learned and accumulated in my 37 years of trading. Now, before we begin today's presentation, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using techniques in order to trade the Forex markets, but please remember that we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin our presentation. Now, I'd also like to mention that you can follow us on Twitter. You can simply go to @SpecialistTrading, @SPCLSTTRADG, and you can follow us on Twitter. From time to time on Twitter, we will be giving you different insights and information and educational tips in order to elevate your trading. Now, as I stated, I've been trading for 37 years. I first started my trading career on the floor of the Pacific Stock Exchange, and I struggled for a bit when I first began to trade. And it wasn't until I got in contact with some mentors of my own. These were elite traders on the floor. These were specialists who taught me how to trade with consistency. So that's what my goal is with Specialist Trading and my educational videos, is to teach you how to trade with the specialist edge, which is really rooted in simplicity and consistency. So here's what you're going to learn today. I'm going to share with you what I feel, in my opinion, is the wrong way to trade pullbacks, and this is probably the majority of which most traders trade. And then I'm going to share with you a simple but high probability technique for trading pullbacks in the Forex markets. First of all, let's start with a brief updated course on what an uptrend is and what pullbacks are in an uptrend. When we're trading pullbacks, we want to see a simplified version of what an uptrend is, which is basically a high followed by a higher low followed by a higher high. Now, the pullback is simply this little sell-off in the uptrend, and what we want to do, our best case scenario, is simply buy on that. And it's the same thing if we're looking at a downtrend. We're looking at a low followed by a higher low followed by a lower low, and what we want to do is simply sell in these little pullbacks to the upside. So as we can see here, in our uptrend and in our downtrend, the best case scenario to buy would be in this little sell-off right here. And then once we see that whatever we're measuring that sell-off on, once we see that it happens again, the majority of people try to repeat it, and once it's reached the same parameters or the same levels in correspondence to this new high, then we step in and buy. Unfortunately, this is what mainly happens. It'll work for a few times until it doesn't work anymore, and then you'll buy and it'll continue going the wrong direction. Same thing happens with a downtrend. We'll see here that a perfect case scenario, everything fits, it works perfectly. The uptrend and the pullback to the upside gives us a perfect scenario to go short and make some money. Then when we go back to the well once more, we decide to use the same parameters in relation to this new low that's been made, and so we sell. Unfortunately, it doesn't work anymore. Now, perfect examples of this and these type of techniques are, first of all, support and resistance. I'd say a majority of traders trade with support and resistance, and conventional wisdom tells us that when we hit some type of support, markets should hold, and when we hit some type of resistance, markets should pull back from there. Well, if we look at a perfect case scenario of a chart of support and resistance, here again, once again, is our uptrend, and when we reach some type of a top, that's resistance. When we come down, that's support. Now, the support is another name for our entry for a pullback. So this is a best case scenario, and this is the way we would hope it would work. But if we apply that to the real world, here's an older chart of the British pound, we see here that we're in a very nice uptrend. We have this resistance followed by support, resistance, support. So the support levels should be areas in which we want to buy on, these little pullbacks. If we look right here, this would be a perfect scenario to buy once more on a pullback. So we enter our order, and it doesn't hold. But then again, we think, well, maybe the true support is this level. So this is where we'll buy some more, and this is where it should definitely hold. And then you see it doesn't. Once again, these type of techniques will work for a while until they don't work, and then you usually end up giving everything back you've just made. How about Fibonacci levels? Another very common way to trade. As we see here in this Australian dollar example, we see here that we've had a nice little sell-off from A to B, and then conventional wisdom tells us when we get to a certain point, in this case the 62% level, we can go short. This is where many times the trend to the upside, the small little pullback, will stop. So you would sell, and guess what? It works perfectly. So now based on the new scenario from C to D, if we bounce up again to the 62% level, we're going to sell again because it should work once more. So we get up to that level and we sell. Well, it doesn't really hold, but it's not really doing anything, so maybe it's going up to the 75% level. So let's sell some more. Nothing happens for the next couple of weeks until ultimately we're dead wrong and we give back everything we made on the very first Fibonacci level retracement. So as you can see, this is what usually happens with pullback trading. The conventional wisdom tells us that if we use the same parameters and it worked this time, well then it should work again. But most of the time it doesn't. We give back everything we made in the first trade and we're left holding the bag with even more losses. Therefore, let's talk about correct pullback entries. Entering a trade based off support and resistance and or Fibonacci levels is similar in my opinion to picking tops and bottoms. These are extremely difficult techniques to master because they're very subjective. As I stated, I've been trading for 37 years and one trader's support is another trader's resistance. In other words, it's not cut and dry. We want something that every trader is going to look at and say, this is a support level. There are no two ways around it. Everyone is seeing the same thing and or everyone is saying this is a resistance level. There are no two ways around it. Everyone is seeing the same thing. Unfortunately, no two traders will ever see the same thing based on these type of methods. In order to have a high probability pullback entry, one must wait for confirmation that the pullback has concluded and that the market is headed back in your desired direction. So you see, we don't just want to wait and pick a bottom and hope that this is the correct support or resistance level. We want to wait for confirmation that it's going in our direction before we jump on board. In other words, if we have these scenarios once again where the pullback worked perfectly, and instead of just blindly buying here at the same support level or Fibonacci level, what we want to do is wait for confirmation that it's headed in our direction. That's when we jump on board to buy, and most likely it will continue. Same thing if we're shorting and pullbacks on a downtrend. Rather than just rely that it's going to use the same parameters that worked before, and rather than just trying to pick a top, let's wait for the market to tell us it just started to go in that direction. Then we'll jump on board and most likely it will continue. So we want to have confirmation rather than trying to pick a top and bottom based off either support and resistance or Fibonacci levels. So how do we do this? Well, here's why I want to introduce a new tool to all of our members and students of Specialist Trading, but something that I've been using for years. This is called the Peti. And what exactly is the Peti? Well, it simply stands for the Primo Early Trend Detector. I've been using this for a good 20-25 years, but I've had to, up until now, put it together by hand. And now we've made it a proprietary color bar algorithm. So it's extremely simple to use. And here's how you basically see if you're in some type of a trend. When you have a perfect series of green bars here, we know that we are in some type of an uptrend. The beauty is that many times in advance of so-called conventional trends, we will see a series of green bars way before it even looks as if a trend has appeared. The same thing appears with a series of red bars. That tells us we are in a downtrend. Okay? And the beauty of this is, once again, that we will get a series of red bars telling us we're in a downtrend way before conventional wisdom has told us a trend has begun. That's why this is called the Peti, or the Primo Early Trend Detector. But remember, once again, this educational video was concerning itself with trading pullbacks in the Forex markets. So how can we use this great tool to help us trade pullbacks? Well, here's the pattern you want to look for buying pullbacks. In an overall uptrend, the first green bar that occurs after a red bar is your confirmation for a buy entry. All right? Remember we talked about we want to wait for confirmation that we're headed back in our direction. So we're looking for that first green bar after we have a few red bars appear. Let's look at an example right here. We've determined that we're in an overall uptrend. We have a nice, long, consistent series of green bars, followed by a few red bars. Okay, this still doesn't deter from the trend. Our trend is still up, but we haven't done anything yet. And here's our pullback. But we're not going to simply try and pick a bottom. We're waiting for confirmation. And guess what? Here's our confirmation, the first green bar. So that's our confirmation to buy. So we enter, and the market goes up. See how simple that is? The Peti, the first green bar, tells us it's time to enter off of the pullback. Same thing works if we're shorting or entering on a pullback to the downside. In an overall downtrend, the first red bar that occurs after a few series of green bars is your confirmation for a sell entry. Okay? So, in this particular scenario, we have a nice consistency of red bars telling us that we're in an overall downtrend, followed by a few green bars here. But we're still in a downtrend, so we're waiting for that first red bar to appear after these green bars. And guess what? Here it is. So this is our confirmation that most likely the trend will resume going lower. So we enter to sell, and then guess what? It goes much lower. And you can often see many times in a sustained downward move that you'll get more and more chances to enter. So here's a few green bars once again. Here's our confirmation to sell once more, and we go lower and once more. So do you see how simple it is to trade pullbacks in the Forex markets using this simple tool? Let's show you some examples of how this works in the Forex markets. Our first example is the Canadian dollar. Now, since we are above the 50-period simple moving average and we have a large number of green bars, it's been determined that we're in an uptrend. But we have a few red bars appear here, so we're not doing anything on this little sell-off yet. We're not trying to pick a bottom. We're simply waiting for confirmation, which happens right here on the first green bar. That's our signal to enter in the Canadian dollar, and in the next 3 weeks, we go up about 300 pips. In the Australian dollar, we see here, because we're below the 50-period moving average, we're in a downtrend. So we're looking for the first red bar. Right here, here's our confirmation. We fall out of bed a couple of hundred pips. It happens again. We sell off about 200 more pips again. So two really nice pullback trades until finally we have sustained movement above the 50-period and a long number of green bars. So this means we simply wait for the first green bar to appear after a short number of red bars, and that's right here. We could purchase at roughly 9,400, and we're up 300 pips in the next few weeks. Swiss franc, we're below the 50-period simple moving average, so this tells us we're only going to be looking to sell because we're in an overall downtrend. That means we look for the first red bar, and you have a series of first red bar entries right here after you have a few green bars. Each one of these could have been a great entry, giving you at least 100, maybe even 200 pips on each trade. Now on the euro yen, we see here that we're in an uptrend since we're above the 50-period simple moving average. So that means we're looking for the first green bar after a few red bars appear. And each one of these buy signals here, the green arrows, would have been where you could have purchased after a green arrow first appeared. And the beauty of this, the Peti and working with Forex pullbacks, is that it works in any time frame. Here's a weekly chart of the euro dollar. We're in an uptrend because we're above a rising 50-period simple moving average. We have a series of just two red bars. Now we wait for the first green bar to appear above the 50-period. So you could have entered roughly at 3,100. It immediately goes up 400 pips. And then we have one red bar appear here, followed by a green bar at 3,300, and it goes up another 500 pips. So this is extremely simple. Remember, we're waiting for confirmation, and most people would say, well, what is the perfect definition of confirmation? Is that another indicator? Is it another support and resistance level? No, it's simply applying the Peti, and that gives you the confirmation that the trend has resumed in your desired direction after the pullback. All right, so let's recap. We showed you the wrong way to trade pullbacks. Unfortunately, I would say the majority of traders, especially beginning traders, seem to feel that this is the correct way to trade pullbacks off of support and resistance or some type of Fibonacci levels or any other technique that conventional wisdom holds as true. In my 37 years, I've seen no consistency to these conventional methods for trading pullbacks. Okay? Once again, as I stated, they will work until they don't work, and then ultimately you wind up giving everything you just made on the trades that did work. What we share with you is a great tool that I've been using for years that has tremendously helped my trading, and that's the Peti. It's a simple but high probability technique for trading pullbacks in the Forex markets, in any direction and in any time frame. Now, for more information regarding the Peti or any other of the methods that we promote and teach all of our students and members at Specialist Trading, you can go to our sister site, which is protraderstrategies.com, where we talk more about our individual techniques and methods, or you can email us at trading@protraderstrategies.com or talk to one of our trading consultants at area code 310-598-6677. Thank you so much for attending this educational webinar, which I like to give to our members and to free members as well, people that can hopefully take something from what I've taught them and educate themselves and elevate their own trading. So please take one last look at our disclaimer, and while you're looking at that, I'd also like to invite each and every one of you to become members of Specialist Trading, and each and every one of you to trading pullbacks in the Forex markets with the Peti. Thank you so much. This is Stephen Primo. I'll see you next time. Bye-bye.